Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover Series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like ADC, Amana puts the global market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 450 assets to choose from, they've got the largest crypto selection in the region. Want to automate your investing? Just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless. You can now deposit crypto directly from your wallet. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Now, let's talk about Startup.oi, a global tech platform transforming how engineers connect with opportunity. They offer high-paying, remote tech jobs that give you complete flexibility in location and working hours. On top of that, Startup.oi hosts free global events, meetups, and tech talks designed to help you grow your skills and network with other professionals across the world. What makes them stand out is their commitment to community, especially in emerging spaces like blockchain, Web3, and the metaverse. Whether you're just starting your career or you're a seasoned dev looking for the next opportunity, Startup.oi gives you a platform to learn, earn, and grow. You can download the app from the Google Play Store or Apple App Store, or just click the link in the show notes. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're here to cut through the noise and bring you the really critical insights. Today, we're jumping into a fresh stack of sources on the crypto world. We'll cover market moves, some big political shifts happening, new tech narratives, and even some, well, pretty strange stuff coming out of the Middle East.
Exactly. Our mission for you today is really to unpack what's going on with Bitcoin, the broader market. Look at the U.S. legislative landscape, which is pretty active right now, and trace these evolving ideas around stablecoins, tokenization, and yeah, that drama you mentioned. You should walk away, not just with facts, but a clearer sense of the real drivers in this space.
Okay. Sounds good. Let's kick things off with the global market picture. This is as of July 7th, 2025. What's the big picture? Market dominance.
Right. So the global market cap is sitting at $3.46 trillion. That's up about 1.6% in the last 24 hours, so pretty healthy. What's really interesting, though, is Bitcoin's dominance. It's huge, 63.04%.
63%. Wow.
Yeah. And Ethereum is holding at about 9.02%. It kind of suggests, maybe a flight to quality. Investors seem to be sticking with the big names rather than spreading out too much.
Interesting. Bit more cautious, maybe?
Could be. Seems like a foundational approach right now.
So that concentration is definitely something to watch. What about Bitcoin and Ethereum themselves? How are they doing individually?
Well, Bitcoin's at $109,471, up about 1.27% in 24 hours, though it is down slightly, just under 1% over the week.
Yeah.
Ethereum's at $2,576. It's had a better run, up 2.53% in the last day and over 3% for the week.
Right.
And even Ripple, XRP, it's seen some positive movement, too, up 2.72% daily, 3.4% weekly.
Okay, and here's something that caught my eye looking ahead this week. Bitcoin ETF inflows. We're seeing $750.3 million.
Yeah.
And it's still early in the week for the West, right?
Exactly. That number could, easily cross $1 billion. So.
$1 billion.
Yeah. And if things stay relatively calm, geopolitically speaking, we might see those figures jump quite a bit by midweek. It definitely signals strong institutional interest.
Okay, now let's pivot to something fascinating, kind of counterintuitive maybe. The Bitcoin Mempool.
The Mempool mystery.
Yeah. What is it, first off? And why is this huge drop we're seeing potentially a bullish sign?
Okay, so basically the Mempool is like the waiting room for Bitcoin transactions. You send a Bitcoin, it goes into the Mempool, miners pick it up, usually based on the fee you attached. Simple enough.
Right. Waiting room. Got it.
What's wild is that the size of this waiting room has just plummeted, over 90% down from recent highs. It's tiny now, like 0.48 millibait.
90%.
Yeah. I mean, think about it. Recently, we saw maybe 5,000 to 15,000 unconfirmed transactions waiting. Back in 2024, it could be 150,000.
Okay, that's a massive drop. So fewer transactions waiting. Why? And why isn't that, bad news, especially for miners?
Well, that's the key question, right? Why fewer transactions? There are a few things happening. First, retail users, they're using stablecoins more for daily stuff. Bitcoin is increasingly seen as, digital gold, a store of value.
Okay, makes sense.
But the really big reason, and this is the bullish part, is institutional adoption. Huge shift.
Yeah.
A lot of Bitcoin flow now is off-chain. We're talking like 7 to 16 times higher than what you see on the blockchain itself.
7 to 16 times.
Yeah.
Wow. So big players moving large amounts using custodians, things like that.
Exactly. Plus, over 90% of wallets now use SegWit, segregated witness. It's a protocol upgrade. It basically helps batch transactions more efficiently, so fewer actual entries on the chain, even if the underlying activity is still there.
Efficiency gains.
Right. And even those Bitcoin network meme coins, they were clogging things up for a while, but they've mostly faded away.
Okay, but still, that drop sounds tough for miners relying on fees. You mentioned this HODL idea sounds bullish, but couldn't a critic say, look, less activity, maybe less utility, maybe future congestion issues if it suddenly ramps up? How do you square that?
That's a fair point. And yeah, it definitely puts pressure on miners in the short term, no doubt. But if you connect the dots, a shrinking mempool while prices are actually pumping strongly, it strongly suggests people aren't selling. They're accumulating big chunks. It points to a long-term investment view, not daily churn.
HODLing.
Exactly.
Right.
That HODL behavior plus all that institutional off-chain movement, it signals real conviction. Smart money treating Bitcoin as a strategic asset.
Okay, interesting perspective. Let's shift from market mechanics to policy, U.S. politics. Big things happening the week of July 14th, this crypto week in the House. What's the agenda? And what's the administration's general vibe?
Right. So the Trump administration has been pretty vocal. They want to, quote, make Bitcoin and cryptocurrencies great again. And a big part of that platform is a promise to completely ban central bank digital currencies, CBDCs.
Completely ban them.
Yeah. He's even talked about an executive order on day one. The view seems to be that CBDCs are potential surveillance tools.
Okay, so that's the backdrop. What specific laws are actually up for discussion during Crypto Week? Is it one big bill or?
It's actually three main bills on the table. First is the Clarity Act. This one's focused on stablecoins, trying to provide clear rules, and also setting up a broader framework for digital assets generally.
Clarity Act. Okay, stablecoins. That could be huge for adoption if it gives legal certainty.
Absolutely. It could mean more regulated, maybe safer ways for you to use stablecoins in the U.S. Then second, and this one's maybe got the biggest potential impact, is the Anti-Central Bank Digital Currency Surveillance State Act.
Quite a name.
It is, and it does exactly what it says, directly targets CBDCs, reflecting those surveillance concerns we just mentioned. It's got support from senators like Scott, Hagerty, Loomis, Boozman. They're calling it, historic for innovation, privacy, blockchain leadership.
Okay. And the third?
The third is the Genius Act, also related to stablecoins in some way, though details are a bit less discussed than the other two.
Got it. So a really packed week for crypto policy. Who's actually spearheading this in Congress?
Well, it's being led by Chairman French from Financial Services and G.D. Thomas from the Ag Department. But you've also got key leadership figures involved, like Speaker Mike Johnson, Majority Leader Steve Scalise, and Tom Emmer, who, he's known to be a big Bitcoin supporter.
Right, Emmer. Okay. And this is all happening alongside economic data releases.
Yeah, exactly. CPI numbers, inflation data are coming out that same week, which adds another layer, right? Especially with the recent jobs report showing $140,000 growth. The whole economic picture feeds into these discussions.
Definitely. Okay, you mentioned earlier retail using stablecoins more. Let's talk about that. How are they shaping the market, and what's this buzz around tokenization? Is that the new hot thing?
Yeah. Stablecoins are, they're the engine right now. 85 to 95% of total crypto transaction volume involves stablecoins. It's massive.
85 to 95%.
Incredible. Right. Look at USDT, Tether, $52.61 billion in 24-hour volume. USDC is next at $5.57 billion. They are the liquidity rails.
So it's not just about volume, right? Are we seeing new uses, new innovation?
We are. And a really key example just came out of Japan. Minna Bank, which is the country's first digital-only bank, part of Okazaki Financial Group, they've partnered with Fireblocks and the Solana Japan team.
Fireblocks. Okay. Big infrastructure player.
Exactly. And they're exploring stablecoins and Web3 wallets. They want to see about issuing on Solana, using it for cross-border payments, asset trading, daily stuff. Big focus on making Web3 wallets actually user-friendly.
Interesting. Solana getting an institutional nod there.
Yeah, and it really highlights Fireblocks' role in enabling this kind of institutional move into blockchain.
So bringing this together, stablecoin dominance, this kind of innovation, what does it mean going forward?
Yeah.
Especially with this real-world asset or RWA tokenization talk. Is that where we're headed?
Well, that's the big question, isn't it? Is tokenization the next major narrative? It certainly seems to be, alongside stablecoins. And what's compelling here is the data. The total value locked, the TVL, in real-world assets has been remarkably steady. It's held around $12.86 billion for almost 2 months now.
Consistent, not just a spike.
Exactly. Consistency is key. It suggests this isn't just hype. It's actual infrastructure being built, attracting serious, sticky capital. It feels like it's maturing beyond just speculation towards real-world utility and finance.
Okay, RWA tokenization. Definitely one to watch. Now let's shift from trends to a specific story, kind of a crypto mystery. This long-dormant Bitcoin whale moved 80,000 Bitcoin, worth what, $8.6 billion?
Yeah.
After 14 years.
Yeah, quite the wake-up call. This massive stash moved in batches of 10,000 Bitcoin, all precisely at 11:00 a.m. Eastern Time. Arkham Intelligence spotted it pretty quickly.
Precise timing. Okay.
And what's really fascinating is what these Bitcoins were. They were coin-based transactions.
Coin-based transactions, meaning?
Meaning they were the original mining rewards.
Yeah.
From blocks mined way back in 2011. These coins had literally never moved before.
Ever moved since 2011?
Never. Imagine mining Bitcoin back then, maybe when it was worth, I don't know, $3.50, and now seeing it at $109,000.
That's unbelievable patience. Or maybe they lost the keys and just found them.
Could be. It really puts the long game into perspective, like finding a winning lottery ticket in an old drawer.
So the immediate fear, though, must have been massive dump incoming, market crash, panic.
Oh, absolutely. And this highlights one of Bitcoin's core features, public verifiability. You can see these huge movements, unlike with, say, CBDCs, where transparency might be limited.
Right.
So yes, initially there was some market panic. People saw $8.6 billion moving and thought, here we go. But Arkham Intelligence followed up pretty quickly on Twitter X. They clarified it looked much more like an address upgrade, not a sale.
An address upgrade,
Yeah.
like moving funds to a newer, maybe more secure wallet.
Exactly. There were zero signs of these coins hitting exchanges or being sold. And trust me, an $8.6 billion dump, we would have felt it. Big time. Remember last year when that government sale happened? Prices dropped sharply. This was different.
Okay, so likely an institution or maybe an exchange just doing some internal housekeeping then.
That's the consensus now, yeah. Upgrading their wallet infrastructure seems the most plausible explanation.
Phew. Okay, crisis averted. Let's pivot now to the Middle East. Some interesting stories out of Dubai, starting with some visa drama.
Oh boy, yeah. This one was strange. Incorrect information started flying around, got picked up by some major news outlets even, claiming that the Ton Foundation associated with Telegram's old crypto project announced you could get a 10-year UAE golden visa using their Ton coin.
A golden visa for crypto. How did that supposedly work?
The story was you'd pay a one-time $35,000 processing fee and then stake $100,000 worth of Ton coin for 3 years.
Okay. That sounds almost too good to be true, was it?
Completely. And this really underscores a crucial point for you, the listener. Always do your due diligence. Verify information.
So the government stepped in.
Oh, yeah. UAE authorities, Dubai Vera, the SCA, the Federal Authority for Identity and Citizenship, they all came out explicitly denying it. Flat out stated. No golden visa for digital currency investors in UAE authorized. Eligibility is strictly based on official categories. Real estate, entrepreneurs, scientists, exceptional talents.
Okay, clear denial. But you said it got weird.
This is the bizarre part. Despite the official government denials, the Ton Foundation's own website apparently still has the news up.
So?
Seems so. And their CEO published it. Even Pavel Durov, the Telegram CEO, seemed to sort of legitimize it, which is just odd given the official stance. Dubai VRA even put out a press release confirming the Ton Foundation isn't licensed or regulated by them at all.
So what happened to Toncoin's price through all this?
Well, it initially pumped over 10%. But then reality set in, and now it's down over 6%. It just starkly shows the danger of these unverified, misleading claims. Could definitely lead to some serious legal trouble down the line.
What a mess. A real cautionary tale there. Okay, on a much more positive and perhaps legitimate note for the region, Abu Dhabi's new digital bond.
Yes, a sharp contrast. This is genuinely innovative. The Abu Dhabi Securities Exchange, ABX, has partnered with HSBC and First Abu Dhabi Bank, FAB. They've launched the first blockchain-based digital bond in the whole Milanese region.
First in the region, okay. How does it work?
So the bond itself is issued by FAB. It's listed on the ADX. And crucially, it uses HSBC's Orion platform for the issuance process.
HSBC Orion, so established players involved.
Right.
What does this mean practically for finance there? Is it just symbolic or?
No, I think this is quite significant. What's compelling is that even though they describe it as DLT-based distributed ledger technology, maybe not a pure open blockchain, it fits perfectly with Abu Dhabi's big push for digital transformation.
Right.
The goal is tangible improvements. Faster settlement cycles, better security, more operational efficiency. It's a real step forward for ADX, helps them introduce new kinds of financial products, and really cements Abu Dhabi's role as a leader in capital market innovation over there.
HSBC's involvement brings that global know-how.
Exactly. They bring global tokenization experience. This feels like a foundational piece for more blockchain-based finance in the UAE and maybe beyond. A solid institutional move.
Okay, good to see that side of innovation too. Finally, let's just quickly touch on DeFi, decentralized finance, and NFTs. What's the latest snapshot there?
Sure. So in the DX space, decentralized exchanges, 24-hour volume is around $10.36 billion. What's interesting maybe is the fee percentage. Total fees collected were about $87 million. That's only 0.84% of the volume.
0.84%. That's pretty low compared to centralized exchanges, right?
Yeah, significantly lower. They typically charge maybe 2-3%. So potentially more cost-effective for traders using DAX.
And who's leading the DX pack? Still Uniswap.
Actually, PancakeSwap is still way out front in 24-hour volume, $4.84 billion. Uniswap is second at $1.26 billion.
PancakeSwap, okay. And NFTs. Man, it feels like that whole narrative has just gone quiet.
It really has, hasn't it? The hype has, completely died down, seems fair, over the last 6 months or so. The focus has definitely shifted, like we talked about, to broader tokenization and stablecoins.
Any shifts within the NFT market itself? Platforms?
Well, OpenSea has actually clawed back a lot of market share. They're leading again about 73-74%. Blur, which was dominant maybe 18 months ago, is down to around 19-20%.
Interesting reversal.
Yeah. And, connecting back to tokenization, you could argue NFTs are a form of tokenization, right? Unique digital assets.
Yep.
So if this bigger RWA tokenization trend continues and gets more mainstream, maybe we'll see renewed interest in NFTs, perhaps shifting from collectibles towards verifiable ownership of more practical digital or even physical things.
A possible second act, maybe more utility focused.
Yeah.
Okay, so wrapping all this up then, what does it mean for you listening in? We've covered a lot, that Bitcoin mempool paradox, the big U.S. crypto bills, stablecoins, and tokenization really picking up steam. And then the contrast between that bizarre Dubai Visa story and the forward-thinking digital bond.
Yeah, it leaves us with a really important question for you to think about, I think. In this world that's so rapidly moving towards digital assets, towards tokenizing everything, how important is that public verifiability we talked about with Bitcoin? And how do different regulations, like the ones being debated in the U.S., shape trust and innovation? Is full transparency always the most important thing? Or are there trade-offs we need to accept as big institutions adopt these technologies, maybe in ways that aren't purely decentralized?
Good questions to ponder. Keep those in mind. Thanks for diving deep with us today. We'll be back soon with another stack of sources to unpack for you.